Hi, folks. Welcome back. This is a session where usually the folks that aren't really trying to learn anything, they'll leave comments and they'll say, You're talking too much. You talk too much," that type of thing. This is the talkative session. Okay, so that's what this is all about. It's Shotgun Saturday. It's where I am allowing myself to just talk, organically, just whatever comes to mind, and kind of cover some things that are psychological. That type of approach to, I guess, a podcast type thing where I'm talking about things I struggled with when I first started learning how to trade, when I teach things and students give me feedback, the level of appreciation for me covering certain things when I do these and what I've done in the past on Twitter and X when I was active there. And the success stories I've received from all of you that have eventually worked your way through the grind and found consistently profitable trading. I want to first get the technical perspective of the NASDAQ out of the way and cover what I think is going to be pertinent for the coming week. Also, before I get to that, and for those that you obviously, some of you know me well enough to know that this coming week is my anniversary. So I will have been married to my wife 24 years, but we were together longer than that. So naturally, being a married man, my wife is kind of scheduling my week to come. So meaning that Monday should be a day for me to be active in the Telegram channel, but I can't guarantee the rest of the week that I will be. Okay, so uh, we're going to be looking at real estate, and I don't know how my schedule is going to be impacted by that. So where and how I can, I will give you whatever I have left in time that my wife doesn't consume this coming week. So it is what it is. I'm not going to argue with her. So Monday for sure, I'll call the market in the morning session, and then we'll play it day by day the rest of the week. All right, so with that out of the way, we're looking at a daily chart here for NASDAQ. And I had a couple people leave comments suggesting what I meant by why is it being called difficult right now? Or why do I believe that the market is difficult right now? Well, it's not limited to just right now. It's been difficult for the last few years, really. I mean, it's been a whole lot more manipulation in the marketplace, a lot of back and forth type price action, aggressive retracements, a lot of consolidation, and then you get these short little runs that are very, very quick and sudden and sometimes violent, but they don't sustain themselves. They really just come back into the range or they peter out real quick. They just stop and it becomes very frustrating. So you can really see that encapsulated in the last week of December. Here, we had this run down. That's been great. And there's been nice swings in that. But overall, we're stuck in this range. And I'll highlight it. So from here to there, that's the range that we're stuck in. We had one opportunity for the market to leave that, and then we stayed inside of it here, stayed inside of it here. We had several attempts to go lower, but it's been met with more accumulation and then staying inside that range. So because it's staying inside of a range that's very well defined, and the volatility within that range is violent, extremely violent, it makes trading difficult. Okay, obviously, spending time with me in the last weeks, you can see that it's not impossible, but if it's going to be a question that you may pose to me if we were sitting and talking with one another in a cafe or whatever, and said, "Okay, Michael, in your opinion, do you think the market's been hard to trade in the last few months, few weeks?" And admittedly, I would say yes. And traditionally, Januaries are typically like that, which is why I don't usually like to do anything in the first month of the year. Now I'll paper trade, I'll do demo trades, I'll tape read, I'll do a lot of that stuff in January's price action, but I'm not actively trying to place real money bets on that price action because I want to get a feel for or connect, get in sync with the marketplace in the month of January. Usually it's the second week of February that I begin and I start trading with live funds, and I work towards whatever I'm aiming for that year. You may have had an easy January. Maybe you were profitable, okay? Or because social media really inspires these types of things, maybe you found your way into profitability, but if honesty was really allowed to come forth, you did it by luck. And then now, because you have been profitable in January, you want to build it up larger than it really is. So we'll see. We'll see for the folks that feel that way. At the end of the year, because this is going to be a very challenging year. I know that going into it because there's so many things that the tariffs that are being um, placed on us by other countries, and what we're trying to do to other countries here really is going to cause people to have to spend more or do without. And that's not going to be stimulating for the economy. And that's going to be impactful in ways that much of us don't really fully understand. And it's going to find its way into markets, and it's going to find its way into trading. And I think that you're seeing a lot of that here, where the market's being held in that consolidation. And it's allowing a lot of selling interest and a lot of buying interest outside that shaded area. So because I'm not a breakout trader, I don't require the market to break out. Okay, I can trade inside the range. You have to strip it down into very generic things like what was the previous day's high? What was the previous day's low? What was the previous session high? Like, for instance, if you're going to trade the PM session in the afternoon for index futures, what was the morning high and low? What's the equilibrium of that range, halfway point? And what are the new day opening gaps in the last 5 days? What is the new week opening gap for the last 5 weeks? Those levels are extremely important, and the market tends to go back to them because they're actual value levels. Okay, because the gap that was created there, it's going to be referred to multiple times, not just simply because it goes back to it and fills the numbers. We don't forget about it. So inside this range, if you're not nimble, if you're not looking for very easy, low-hanging fruit objectives, you can get caught offside. That means you're on the wrong side of the market. And many times you'll force yourself to hold on to a trade that probably isn't all that great because you're wrestling with uncertainty and you've already committed and you're into a trade now. So naturally, nobody likes to lose. Nobody likes to close a trade unprofitably. And to close a trade that feels like it was a good idea when you first got into it, and then after you've been in it for 5 or 10 minutes, you feel that interest, that confidence that you initially had waning. It's falling away. But then you start wrestling internally about, hey, this is quitting if I get out. I'm not sticking to my plan. Well, you have to build in some measure of expectation for periods when you do what a human does, do things wrong. And as a consistently profitable, professionally minded trader, you have to give yourself permission to abort. When you think that what you got into the trade for initially, when that's no longer valid, or you're beginning to question it, the best thing you can do in this kind of environment is pull the plug on it. Because at any given moment, something could pop off geopolitically and cause these markets to run just like that. And your little account will be smoked. have such a degree of drawdown, it will cause you to want to go into that loser cycle, trying to get it back, trying to get it back. When these market environments, stuck in a range like this, amplifies greatly, exponentially, the level of difficulty it is for a new trader. Now, when you compound that with an impulsive personality, which most people do have that, as especially males, young males, they feel that they're more formidable than they really are. They pretend that they're far better as a trader. And I did all these things too. So don't think I'm talking down to anyone. I did the same things when I was younger. But you have to be very careful and have to guard yourself. Don't let yourself have these vain imaginations that you're going to be able to walk out here and just own the market when it's doing things like this. Now, I've shared real-time analysis, I've shared executions, and I'm sure some of you were probably impressed with that. I'm not impressed with that. Okay, I'm not impressed with it at all because I know that the conditions are holding back my trading. So I have to be very, very selective, very nimble. And the types of trades that I'm more comfortable holding for, I'm not comfortable holding right now because there's a lot of manual intervention. That means what the market would generally do, where it's very fluid and it's allowed to behave in a manner that's low resistance, it's not being allowed to do that. It's being strangled, it's being held. And when we can identify these types of market conditions, we don't look at that and say, well, the moves aren't going to be that great, so I'll just trade bigger positions to make up the difference. That is trader suicide. You're literally euthanizing the future profitable, consistent trader in yourself by adopting that mindset. Because what you're trying to do is compensate versus allowing yourself to evolve, allowing yourself to acclimate yourself to the present market conditions and sizing down, lowering your measure of frequency in trade, lower your expectations of what you expect to get from the trade. Those days where you're getting these big blockbuster types of moves, we will have periods of that this year. I believe in May, June, going into July, we're probably going to have amazing volatility. May start as early as the last week of March. But typically around mid-April going into May, there's just a wonderful period of time where the market just seems very easy to trade. And then the second part is in the fall. So usually the last week or so of August, it can be as early as that, but generally September, October, November, and the first 2 weeks of December, we have really nice volatility that's clean price action. So if there's ever been a year where you've been wanting to be careful, conservative, not over leveraging, not trying to be a cowboy or a cowgirl, you're not trying to get on this market and treat it like a bull or a wild Mustang and ride it for all it's worth, because it may buck you off and you may fall and hurt yourself. You may not be able to continue the rest of the year psychologically, because it will cause you to have emotional, psychological, and financial damage to the degree that will make you second guess every single trade you take after that. So as an educator, I'm trying to be as responsible as I possibly can in reminding you all that we are in very, very troubled waters. As a commodity trader, that is a wonderful condition, because that means there's going to be big moves coming. Look at coffee. We'll look at coffee in a minute. But coffee prices have gone through the roof. Cocoa. I talked about cocoa 2 years ago. I said it's likely to go up, and it's created a bull market that rivals the velocity of even Bitcoin. Coffee's doing very similar things. When you have tariffs, when you have all these trade wars going on, look at how it's been for you at grocery store. Expensive, isn't it? It's extremely expensive. And that pain at the cashier when you're paying for your goods, you're remembering that. Some of you probably are talking about it constantly, complaining. Maybe complaining to yourself, maybe complaining to your coworkers, your friends. And that builds and it builds and builds. And all of a sudden you feel like you have to be doing things recklessly just to get out of that when it's not going to leave us anytime soon. In fact, I expect things to get even more expensive. So that's not an invitation for us to be wild and risk it all just to see if we can get a big win, to get us through that hump right now, to get us through making our ends meet. These are the times where you have to be very sober minded and you have to slow your roll, trying to be very responsible with what you're given in terms of the trading account. Whatever account it is, whatever equity size it is, you have to guard it because it's very, very easy to lose it in these types of conditions. And to lose it when you're just trying to over leverage because you're feeling the pinch of the everyday life being expensive or the uncertainty of what's going to come down the pike later on. I think we're going to have a very wild summer. I believe it's going to be a violent summer, not just in the markets, but I believe it's going to be violent in the streets. And people are going to pop off. They're going to just do crazy stuff. And you don't want to be doing that in your trading accounts. You don't want to be risking it just because you can afford the new market account to be reset at your prop firm, if that's how you trade, because largely that's most of what everybody's doing now. It's easier to do the lottery ticket prop firm stuff, but they keep changing the rules. They keep making it more difficult. They keep moving the goalposts, saying you can't do this, you can't make more money, you have to be able to do this, you have to be able to do that, when trading in itself is about being profitable. And if you have a model that works well, there are times when you want to push that model's edge, and there's times when you don't. And prop firms are never going to let you push that edge when it's more appropriate to do so for your model and your present understanding about the marketplace. But right now, even at the highest tier of my understanding of price action, I would still not push with the largest level of leverage I could use in this present market condition. Wouldn't do it. Because you might be asking, well, why not? Spit it out. What are you afraid of, Michael? I am expecting a black swan event. I kind of built this up in you guys over the last few years when I was talking about it, but I'm not going to go into great detail, but you understand exactly what I'm talking about if you were listening to me for a long period of time. And when I used to do Twitter spaces before it became X, I was very forthcoming. I explained what I viewed, in my opinion, was likely to occur, and we're seeing it. We're seeing all that stuff, and it's going to be very impactful to the marketplace. And I don't say these things to try to worry you. I say them because I want you to be aware that it's going to cause the market's influence over people to force the weaker person, the weaker trader, the less responsible, the less rule-based critical mind to do things recklessly and to gamble. And right now, doing extremely large trade sizes, insisting on big payouts, big wins, is a gambler's mentality. And that's what I'm trying to avoid, in you as a student, because I don't want you to fall victim to your own ignorance. Because it's very easy to talk yourself into, it's going to happen. It's going to happen. I watched a gentleman that he really isn't all that well known. I don't believe, and I apologize if it sounds condescending, because I don't think he's a well known rather individual, but he tends to be somewhat of a gambler, and he live streams sometimes, I guess, and he had a position on. And in my opinion, he was more inspired to do it because he saw the outside influence of other people talking about what he was doing. And he adopted this. Well, I'm going to do it because everybody else thinks I shouldn't, and I can't. And that's this climate's strength. That's the weapon that this type of market condition uses on weaker minded, less informed, undisciplined, impulsive traders slash gamblers. They will recklessly plunge ahead just because they want to be able to feel good about themselves, be able to show it in the other people's face that doubted them. Look what I did. You said I couldn't do it. Look at this. Ha. Let's go. Let's go. You don't want to be doing those types of things in this climate. Don't let anybody influence you. Nobody, even me. I'm trying to be a voice of reason when I'm talking to you in these Shotgun Saturdays. It's me trying to counsel you through the voice of reason. I'm never telling you to trade with real money. I'm never telling you to push the envelope in terms of leverage or over trading. I'm actually saying the opposite. I'm saying go down to one contract, go down to one trade per day, and be content with that until we leave this range here. And I personally don't care what side it leaves. It could go higher, it can go lower. I don't care. But as long as we're inside this range, it's going to just hammer back and forth, bang around, and the ranges are going to be ridiculous. They're going to be one impulsive run, then it stays in the either upper half or the lower half of the range that was defined. And you have these weird wiki days, and you miss the one good opportunity, you miss the real trade for that day. And what I've done is I've adopted this mindset that I'm going to look for the setup, either pre-market or in the opening range. I'll look for the first percent of fair value gap, and then I'll use that with a bias. And I get a piece of it, and that's it. I'm not demanding that I get all of it. So here I am. I'm 33 years experience into this, and I'm telling you, I'm lowering my perspective. I'm lowering my expectations for the best case scenario. Normally, when we're not in a ranging market like this, I have a little bit wider range of opportunity. I always have like a best case scenario, no matter when I trade and how I trade. I always have the best case scenario if I'm right at all levels of correctness and it really takes off in my long or really takes off in my short. What is the best case scenario that I could ever expect for that trade to pay out? That's usually where I'll put my limit order in. But I'm not demanding that level be hit for me to be profitable. I'm taking something off at logical levels, either an imbalance that's opposed to my trade direction. In other words, if I'm long, I'm looking for bearish fair value gap. Once it fills the number on it, I might take a partial there. Or if I see a old bearish fair value gap when I'm long, and then it becomes an inversion fair value gap, the next short-term high where there's buy side, then I'll partial there. So I'm already building in areas, even before I put the stop loss and enter the trade. I already know where I'm going to reach for to potentially take something off and secure something in terms of a profit. Are you doing that presently? Have you done it in the past like that? Because that's a sound, principally oriented, rule-based trader. That's someone that has the ability to plan correctly a trade. And then having that plan and then executing on it is excellence in execution. And that's what you should be striving to do. You want your trading to be so refined, it doesn't matter how much you're making per trade. Because if you refine your model and you refine your trading edge, you get to the point where you're consistently able to see, I know there's going to be a setup in the coming hour, in the next 3 hours for this morning session or in the afternoon session. You know there's a setup coming. You know what it's likely to reach for because of your experience. You know how they're going to target that liquidity above or below. And you very selectively look for your entries and you place a very realistic stop loss, not opening yourself up to wider risk than it's necessary, but then also not demanding that it's so small and thin that you want to be able to impress everybody online because you had a one handle stop loss. The volatility in the market right now is extremely, extremely high. So I have to pick my shots very carefully, very, very carefully. And I don't care what the final outcome is. I'm more concerned about, am I following my rule-based ideas, the principles I have behind my models, and I'm being very diligent about staying within those parameters. Because left to my own devices as a human being, I could get wrapped up in believing that I'm going to outperform the current market condition, and then I would incur losses, drawdown, and then I would feel demoralized because it goes against what I've trained myself to observe in my own actions and what the market is typically usually doing this time of year and when it's in these environments like this. So in closing, because I don't want this one to be long, and there's some of you are hissing and moaning, oh, come on, I like the 4-hour one. We won't ever see a 4-hour one anymore. Okay, I don't have it in the tank anymore. But we have these relative equal highs. I mentioned on Tanya Trades, which again, congratulations on your 100,000 subscriber. I look forward to your unboxing. The January 22nd, I mentioned in her live stream to note that, because that high with this high here, those are relative equal highs. There's a very obvious buy side liquidity pool, daily chart based there. We've been working with this gap here a couple different times now. I'm not convinced that they're done pumping it up. I think that's too clean. So even if it takes it higher after going above those highs, or if they take it above those highs and then that tops the market, I'm still, I think these highs are suspect. Now, I'm willing to be wrong. It's okay. But right now, I'm not buying that this was all there was to it. Okay. Because really, we're just working this gap. So I just wanted to sit with you for a little while this morning and kind of be a voice of reason, just remind you that there are extremely high risks, and running into them, with your sword out, throwing your shield to the side thing, it's just going to be me swinging, hacking, and taking down the marketplace. It's not likely that it's going to be successful doing that. Be selective, be patient, and demand high probability setups, very high quality setups too. And you'll probably do better going into this year. That's all I got for you today. I will touch base with you, Lord willing, on Monday morning in the Telegram channel. And I wish you all a very pleasant weekend. Until I talk to you then, be safe.